Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future chart. Now we have a lot to cover in today's video, but just before I get started, if you would like to receive my daily market research over on Telegram as well as copy my own personal trades, make sure you scan this QR code. It will take you to my website where you can sign up. It takes 10 seconds to sign up and you get your first month completely free of charge. But let's get started here with today's video. S&P 500, continuing to fall here as we work our way through this trading week. Currently trading at 4,156, and it's come apparent now. This is actually something that I mentioned during yesterday's video, that we are in the process of forming this five-wave structure, and it was not yesterday but the day before, so on Tuesday, when I said it was a good opportunity to take profits when we rose all the way up to 4,260ish, because I did believe that we were in this 4 to 5 wave. The good news is that we've now, during yesterday's trading session, gone and undercut that second to third wave low, which was all the way down around 4,189. And in my own humble opinion, I think that this is it. I think this is really as low as we get now for the S&P 500. I think this is where we are going to see completion of this five-wave structure, and we will be met with a sharp reversal. I think what's very interesting as well is this structure here on the 10-year bond yield. We've just finished completing this five-wave structure, and we are now in the process, in my opinion, of forming an ABC correction. The whole day yesterday, the market was a bloodbath because everyone was saying, oh my God, maybe the 10-year bond yield hasn't yet peaked and we are going to go and break above the highs. But in my own humble opinion and in my own analysis, I just saw this as a part of the ABC correction pattern, and I think that we are now in the cusp of seeing a further breakdown here where we go and take out 4.8% and go and test roughly around 4.73%, which of course is going to offer some upside for the broader stock market. I think we just need a catalyst to send us on this path a little bit faster. I think that's obviously going to have to be a negative shock to the US economy, or maybe even just some good news with regards to the stock market. Maybe it's Amazon's earnings later on this evening. Who knows? There could be a black swan event just waiting around the corner, and I don't know about it. But then just quickly moving over to Nasdaq100, very similar. This is a daily chart. It's clear to me that we're currently in this downtrend. You can call it a bull flag if you zoom out and look at the sharp gains that we've had so far this year. And many investors are looking for that breakout of this bull flag to go up towards the yearly highs by year end. But if we just break this chart down and we go into the 2-hour time frame, it's very similar to the S&P 500. We're currently in the process of forming this five-wave structure. And, in my own humble opinion, again, I think that we are pretty much there with regards to completing this fourth to fifth wave. And soon we will be met with a very sharp reversal where prices can go back and trade north of 14,600 and perhaps even go and target 15,000. And then here for the DowJones30, again, very similar to the S&P and the Nasdaq100. We have just completed this fourth to fifth wave, and I think that it's only a matter of time now until we do go and break back above this current area of resistance that has formed over the past couple of trading days, up around 33,235. So just to conclude, I think that the key is the 10-year bond yield. Once this really starts to roll over and trade sub 4.9%, that's when we will go down and target 4.73%, and that will give a lot of upside to the stock market. What I really want to see here is evidence of some strong buying, a break back above the swing highs that we achieved back on Tuesday, up around 4,256. Once we get that, that will then confirm that we are likely then to go and trade back up towards, let's say, 4,300, 4,400. One thing to really keep your eyes open and peeled on later on this evening, guys, is Amazon's earnings report. Now, I have spoken to a lot of my contacts over the other side of the pond over the past couple of trading sessions, and a word on Wall Street is that Amazon are going to post some very, very attractive numbers, and I think that there could be some upside in the stock later on and could save the big tech trade. We've had Microsoft that reported good earnings, we had Google that reported good earnings but did miss on a few metrics. Same with Facebook last night, they beat on both top and bottom line, but there's a few metrics in terms of operating income, etc., that did scare investors. But these big tech names are still reporting some fantastic numbers, and despite the stocks selling off heavily over the past couple of trading sessions, I think the key is just to kind of zoom out and look at the bigger picture. Since the beginning of the year, we are up significantly, and the fact that we're giving back some percentage points here is nothing to really worry about too much. But I would actually be a buyer on this weakness, and of course this will ultimately have a positive effect on the broader stock market. So I look at this weakness over the next couple of days as a good opportunity to be a buyer here as we work our way through the back end of Q4 and of course the back end of 2023, where I do believe that markets will finish near the yearly highs by year end. Don't forget, guys, if you'd like to follow my trading signals, then make sure you scan this QR code on your screen. It'll take you to my website where you can sign up. Your first month's completely free of charge, and if you don't enjoy the service, you can cancel at any time and you will not be charged.